Yo, what's going on everybody, and welcome back to another video. So in this video, I'm going to give you guys the analysis and the recap of the current trade that we're in right now. As you guys just saw, we did hit stop loss with our sell position. So we had two trades running. I'm going to show you guys right now. So we had two trades running. Our sell stop just got hit stop loss. So we have the only position that we have currently running right now is a buy position. So with the sell, I just lost $960. So I'm currently up $688 for the day. And then we have the trade profit, which this is the current profit that we have running, which is these buys, which we're floating right now $2,500 in profit, which is insane. As you guys can see, let me make sure you guys are able to see this. So $2,500 is what we're currently floating right now. And then the loss that we had right now, which was $960, but this is the current profit that we're floating for the entire day. So I'm actually going to update the groups, right? Since we just hit stop loss in our buy position, we're currently floating 250 pips at a 1 to 2.5 risk to reward. So in my honest opinion, I might be closing out this trade right now here in profits. We're very, very close to hitting our final take profit, which will be set around the 40-60 zone. So I'm actually going to start putting that in profit. So 40-60. And then, so we're technically floating right now almost $3,000 in profit. So we're $2,900 in profit. So we're going to write that right now. So we're floating 250 points. Let me just update the groups. Let me just close this out right now. We're closing this out at $2,700 in profit, $2,700. So I'm going to do it with you guys. We're going to turn off this OBS. You guys can see the profit right there. And we're going to close this out right now. Close. So our buy position is closed. Total profit of the day is sitting at $3,445. Beautiful. So let's update the group. Up 250 pips. 250 pips. 1 to 2.5 R. I've closed trade fully. There we go. So now our buy position did recover our loss plus more. So that is beautiful. So what a positive day. This is my day back after taking a break yesterday. Yesterday I did not trade. I took a day off. But I'm going to explain to you guys all of that. So we just closed out this position right now at 250 pips at a 1 to 2.5 risk to reward. So beautiful trade. Our sell position we entered twice because we did have an early position, which we did end up hitting take profit 1. We got stopped at a break even with 1 entry, and then I told everyone to continue holding the other entry. But as we speak, you guys can see that gold continues pushing higher, almost 260 pips right now in profit. But we're good. We're good with the profits. I'm excited with the profit that we made to date. So nothing negative at all. I'm going to give you guys now the analysis, the explanation on why did I take both of these setups. So let's get right into this breakdown. So like I told you guys earlier, I did not trade yesterday, but this morning, I went over the market, pretty much going over what price action did yesterday, right? And if I did trade yesterday, we would have caught a very nice setup yesterday. We would have probably caught buys over here, caught buys from over here, and we would have target all the way towards the upside. So we would have had a positive day yesterday. But going over the review, right, was very simple. I just want you guys to focus on these entire market structure patterns, right? So first thing first, overall, obviously gold continues being bullish, right? The trade that we took this week, the first trade that we took this week was these buy position, right? Which was these sells and then these buys. Notice these buy, which was simply an impulse move towards the upside, just a continuation towards the upside, right? Now, notice once we formed these highs over here, we did get a pullback towards these entire broken structure. So I want you guys to focus this entire broken structure, which is simply around the 39.45 zone, which was previous area of resistance. We had an impulse move towards the upside. We formed up another area of resistance. Price action pulls back. What do we form? We start building up this entire bullish foundation. This resistance over here has now turned into an area of support. Now, once we turn into this area of support, obviously we started noticing this entire broken structure. We had this structure over here, which at one point we did break underneath. So the possibility of price action coming back towards this level, rejecting it off and holding as resistance, always going to be 50-50%. So this setup over here was mostly probability. But since we respected major structure, resistance turns into support. We had the broken structure build up this entire bullish fair value gap right over here, which price action had an impulse. We had the pullback and we noticed that price action respected it. Cool. Now I want you guys to notice this entire price action right over here. We also have the highs. We broke above these highs. If we go back here into the 30-minute structure, you guys can simply see how these highs over here has now turned into an area of support. where buyers started stepping into the market. So we respected major structure, we respected fair value gap, we broke above major highs, pull back, respectable structure, and build up this entire solid bullish foundation. Now, once we started respecting all of this entire market structure, I want you guys to focus all of this entire price action. If we go back here into the 4-hour time frame, notice this 4-hour bullish engulfing candle closure, or not engulfing candle, but notice this entire bullish candle closure. We close massive, right? Very strong bullish candle open. So if we go down towards the lower time frame, obviously there's going to be a lot of gaps. There was no pretty much reversal. It was just simply an impulse move, right? So those impulse move, obviously, and if we go back into the 4-hour time frame, this entire gap from here to here is an entire fair value gap off the 4-hour time frame. So now if we drop down towards a lower time frame, obviously we're noticing that bullish, all of this entire fair value gaps from over here is being respected. All of these fair value gaps over here are being order placed, right? Which obviously price session is having the pullback, and we are respecting each and one of them. Now, I want you guys to focus on the sessions that we trade. So as most of you guys understand, how we trade the market is that we simply look at previous price action. And what I mean by previous price action, we're going to be focusing on previous trading session. So we focus on the Asian session, and we also focus on the London session. Since we trade with the New York session, we want to understand what went wrong during the Asian session, what went wrong, or what was going on between the Asian session and what was going on between the the London session. Once we overlap towards the New York session, we're just waiting for price session to have reaction towards these levels, right? So very quick, we're gonna go over the Asian session. What do we notice over here after this entire impulse move towards the upside? I want you guys to notice how we build up this new high right over here, which was going to be set around the 40.32. These highs over here was the new all-time highs during the Asian session. The Asian session, once we build up this new high over here, we had a pullback. And where exactly did we pull back into the markets? We pull back into this 15-minute bullish fair value gap. You guys can see it. From this point to this point over here, we had an impulse move towards the upside, and we had the pullback towards this fair value gap. What do we notice? We notice that price action obviously had a reaction of this fair value gap, showing us that the orders or the bullish order is still active. Once we build up and rejected off this 15-minute bullish fair value gap over here, we had another impulse move towards the upside. What did we build up over here? We build up another 15-minute bullish fair value gap from this gap towards this gap over here. And what do we notice if we focus on the market structure? We also notice a break and retest above these Asian session highs over here, which has now turned into an area of support during the London session. So pretty much the confirmation that we have here is that first, the trend is bullish. Second, we respected the Asian session fair value gap. Third, we had the London break the structure above the Asian session highs, which has now turned into a support. And we also have another 15-minute fair value gap over here, which is pretty much pending orders, right? So again, we had the confirmation, we had the impulse move towards the upside. Let's say that 60% of traders got into the market over here. Another 20% of traders got into the markets over here, meaning that there's still 20% leftovers over here that needs to be filled up. So all of this entire fair value gaps over here, all of this entire orders are unfilled orders. That price session needs to return back towards the structure to respect it to continue pushing the market even higher, right? So that was pretty much the idea setup that we had this morning. Now, during the early New York session, you ran a late London session, we had impulse move towards the upside. But I want you guys to notice this entire structure. So we're basically trading off this fair value gap, and we're also trading off the structure. The structure simply because, again, we want to make sure that price is aligning with our confirmation. We want to make sure that price is trading on the right exact trend. In this case over here, the trend that we are trading is the bullish trend. So we had the impulse move towards the upside. We came back to retest multiple times this entire structure, which if we go back towards a 5-minute time frame, what do we notice? We notice that price action is building up all of this entire bullish structure right over here. Support, 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 and support, and support. So we're noticing that we're trading above these Asian highs. We're maintaining stuff above the London session support over here, that during the New York session, we came back and retested it, and we had respected it. Cool. Now, the only thing that I was waiting for was for a deeper pullback towards this 15-minute fair value gap right over here. So we're not just trading off the structure, we're pending with the structure, but we also have the areas of interest. The areas of interest where the orders, where there's a higher probability of orders being placed. And I'm going to give you guys an example. If I would have simply entered the market right over here, and my stop loss would have been underneath these lows over here, like say some point over here, there was a probability of price action almost waking us out of stop loss, right? Almost waking us out of stop loss due for a few reasons. The few reason is simply because one, we are entering the market off just simply reacting off this entire structure. Two, this was an early impulse move towards the upside. So notice if we go back here towards the 30-minute time frame, I want you guys to notice this 30-minute candle closure. This 30-minute candle closure is just simply liquidity sweeps. It's just grabbing liquidity towards the downside. If we notice the upside, it did the same exact thing. We had the impulse move towards the upside, grabbing liquidity from these highs over here, where sellers started stepping into the market. Right, so this confirmation over here was another reason why we also took the sell position, but we will go over that later on. But again, we have this 30-minute, which has respected all of this entire 15-minute fair value gap. We go back here into the 15-minute time frame. I want you guys to notice how the 15 pulled back towards this level. Yes, we did close underneath the structure, which is exactly why we don't want to enter the market right away, because we have closed underneath the areas of interest, like the structure, right? But we are now retesting this 15-minute bullish fair value gap. Now, if price action would have closed underneath the structure, today's story would have been another plan. We would have simply waited to see how price action reacts towards these lows over here. But again, we respected and we closed above these entire 15-minute fair value gap, and everything aligns with our confirmations. So once we pretty much close like this, all I simply waited for, if we go back here towards the 1-minute time frame, all I simply waited for was for price action to maintain itself and close above the structure. So we have the first 15, which was a pullback towards this level. Then we have the 5-minute closure above the areas of interest. Price action once again is pulled back towards this level. We have the first rejection, the first bounce. All I simply waited for was for a 5-minute candle closure and a 1-minute candle bullish engulfing candle closure, which was bullish confirmations. Again, we have these lows over here that are being respected. If price action would have wicked out and broken under these lows, would have simply been a broken structure, which obviously invalidates our confirmations. But since price action was respecting it and we were maintaining itself above this 15-minute fair value gap right over here, and we also closed a nice 1-minute bullish engulfing candle, that's exactly where I entered the market, and I told everyone to enter the markets. We end up hitting every single take profit, as you guys saw earlier in this video. We just closed out this position at a 1 to 2.5 risk to reward. Our final take profit was going to be set at a 1 to 3 risk to reward, but again, since we just did this all live, I did close out the profit. Right now it is currently 12 o'clock, and we also have news at 2 p.m. So don't want to be active in the market. I'm already done for the day and secure the profits. You guys saw the profits, but that was the original plan with our buy position. Now we're gonna go over the sell position, which was very simple. Now the sell was considered as a high risk sell. So if we go back here into the Telegram, we're gonna go back to the buy position. The buy position that I sent out this morning was at 9:49. And then the sell position that I called out this morning was at 10:46. And then this is pretty much the analysis, the reason why I was taking these type of setups, right? So again, we have the rejection of all of these entire highs. So I want you guys just to focus on these major highs. And I also want you guys to focus on the New York session highs over here. So this was during the late London session. We built up a new all-time highs. Once we build up this new all-time highs, we did see an impulse move towards the downside. Yes, we are still trading above this entire support structure. But I want you guys to also notice how we are simply reacting off this entire supply zone, this minor supply zone. So since we are rejecting off this minor supply zone, we have the New York session highs over here, which immediately we did see that sellers started stepping into the market. Cool. We're noticing that sellers are now active in the market, slightly active in the market. So in today's early price session, we simply had buyers versus sellers, right? We were respecting this level over here, and we were also respecting this level over here. The New York session we respected, we had another impulse move towards the downside. Then we had another impulse move towards the upside. Once again, we respected these highs over here, and we also closed underneath these entire two structure. We go back here into the 15-minute time frame. I want you guys to notice how that 15-minute candle closed. Look how we just pretty much liquidity swept towards these highs over here and towards these highs over here and closed underneath these areas of interest, right? And then notice this next 15-minute candle over here, which was simply a bearish engulfing candle. We go back here into the 5-minute time frame. What do we notice? The 5-minute build up this entire 5-minute fair value gap right over here, which obviously we retested a few times. So this over here was still considered high risk, since we're all obviously still trading against the trend. The probability of the setup was always going to be 50-50%, and it aligns a lot with my trading plan and my trading setup plans, right? So again, trading is all about probabilities. If it aligns, if your plan literally says, hey, I'm going to be taking a trade if it breaks above these highs, I'm going to be taking a trade if we liquidity sweep towards these highs over here, even though it's high risk, the probability is going to be 50-50%. Your job as a trader is to literally take exactly everything that's in your checklist. If it doesn't apply your checklist, you guys are not going to be taking these trades. But if it applies in your checklist, these are the type of setups that you guys want to be taking. And this is the type of setup that we took this morning, which was simply a probability setup. The same exact probability that we took on Monday, right? So again, we respected this entire 5-minute fair value gap. We noticed that price action came back towards this level, few rejection, we started seeing some seller opportunities. Now, the perfect entry that I really wanted was honestly for price action to close an inverse underneath these lows over here. So if we would have closed an inverse under the 40.37, this setup over here would have made more sense. This would have been even an A plus entry. Our entry was simply more of an aggressive entry, but this will be some pretty much the idea that I wanted to see for this entire setup to actually play out, probabilities, right? But again, the confirmation that we had the first reaction of this entire fair value gap. We did see that seller stepped in. We noticed these highs over here. This highs over here for me was simply, the liquidity sweep towards the upside since we closed back underneath these areas of interest. So all I simply waited for was for a 1-minute candle bearish closure, right? So we go back here into our entry. I want you guys to notice this foundation. We are pretty much retesting this fair value gap right over here. Price action respected it one time. We came back, respected it, and started building up this entire solid foundation. The idea, again, was simply for price action to close an inverse underneath this entire 1-minute fair value gap. If price action would have inverse, again, the setup would have played out very nice. But my entry candle was simply this candle right over here. So this was my first entry, which was at 40.41, which is where I told everyone to sell the market. Price action, oh my bad guys, this wasn't the entry, this was the confirmation, but the entry was actually right around these zones over here. So we had the push towards the upside, we took above all of these highs over here, and we're still respecting the 5-minute fair value gap, and we're still closing underneath these levels. You guys can see that, right? So we go back into the 1-minute time frame. All I simply waited for was for price action to close underneath these highs over here, which is exactly what price action did. We closed underneath. Now the only turn off was simply because we were simply bouncing off from these highs, from this fair value gap. So we had the first rejection, which caused a push towards the upside. Price action comes back, and we also respected all of these entire highs over here. Notice how we're just simply bouncing off from points to points. Now, this over here was just a confirmation. Like I told you guys, this was an aggressive entry simply because we reacted off this fair value gap twice. The right entry for us, it would have been a higher probability, will simply be underneath these lows over here. So now you see exactly what I'm telling you guys, how our entry could have simply been over here, but we took an aggressive entry. These are type of setups that I like to screenshot and just simply journal them and explain, okay, I could have taken the entry here, but I took it over here. What was the reason why I took it over here? Simply because we were bouncing off from this entire structure. So the probability obviously was still there, but it was a higher risk since our entry confirmation would have been underneath these lows. So if I give you guys an example, if we go over here with US30 this morning, I was looking for a sell opportunity for sales position, right? Since price action was coming back towards these entire supply zones, which we were rejecting, right? But my entry confirmation for the sell position at this point over here would have simply been an inverse underneath these entire lows. If we would have inverse and closed underneath, this is exactly where I would have taken my setup. But there was no confirmation at all for me to take the setup, right? We were respecting major highs, all of these entire major levels, but notice the lower time frame never gave us the entry confirmation. For gold, in the other case, we never got the entry confirmation, like the confirmation that we wanted, which will simply be underneath this entire lows over here, but we were respecting off all of these entire structures from this point over here, which obviously price action was just bouncing underneath. So we had the first sell-off, the second sell-off, the inverse, the take above all of these highs and close back underneath these highs over here. I entered the market off this 5-minute candle closure. Price action comes back, activates our second entry, which was at 40.43. We were in drawdown, so close to getting stopped out of stop loss. Look at this. And then price action reverses, and then we end up hitting our first take profit, which was take profit 1, right? But I want you guys to, again, notice how this gap right over here, we respected it. So like I was telling you guys earlier today, it was literally the market fighting with each other. We had probabilities for both sides, the buy side, and we also had the probability for the sell side. What made up our trade today was simply the early trade that we took today. But the sell, obviously, it was there, so I would take the setup over and over again. Now, the only reason why the setup did not play out, simply two reasons. One, we are still overall bullish, so we're pretty much trading against the trend. We're looking for counter trend trade sells, obviously with high probability. If there's no probability, we're not going to be taking these type of setups. And then the second reason why the setup failed was simply because we were bouncing off this entire fair value gaps right over here. The demand zone where a lot of orders were being placed, a lot of buyers were holding and respecting this entire structure. So simply creates the next higher low. We have the low point over here, the high point, and the higher low. So all of this entire bullish structures over here were being respected. I did manage to hold the last position, which was at 40.43, simply because again we had our buy position open. But what was going to be the probability? So I did understand my risk tolerance. So we go back here into a Telegram. This is where I told everyone. Yeah, so if we look over here in the VIP, this is where I've messaged them, risk tolerance. I'm willing to take 40.43 again. Setup aligns with my plan. I'm aware of the risk, but we also have our buy position open. So if it sell hits our stop loss, our buy will recover plus more. And I showed you guys exactly what I meant earlier in this video when I showed you guys the loss from the sell and the buy position that we closed that made up the losses, literally risking the same exact percentage. So that was the risk tolerance. I was still, the reason why I continue holding this position is, again, it aligns with my plans. If it doesn't align with my plans, I'm closing it out. But if it aligns with my plans, I'm going to be taking this setup over and over again. Doesn't matter how many stop loss I hit. If it aligns with it, that is exactly what you guys want to be doing. But those are pretty much it, guys. The analysis and the setup that we took this morning. Unfortunately, our stop loss did our sell did hit stop loss, but our buy did end up hitting our final take profit for 1 to 2.5 risk to reward. So we're currently up almost like 1 plus R for the day, almost 1.5 R for the day, which I have to check over my personal account and the account management. But we closed out the day profitable, and we at least made our profit coming back from a day off. So that's pretty much it, guys, for today's analysis. I hope you guys enjoy, and I hope you guys understand exactly every structure that we went over. So I'll see you guys in the next one. Peace.